ABC were three partners sharing profits and losses in the ratio of 2:2:1. And this was the balance sheet as at 31st December. A's capital 30,000, B 20 and C 5,000. General reserve 10,000, creditors 15,000, total 80,000, building 40,000, cash 15,000, profit and loss account 5,000, furniture 20,000, total 80,000. C retires on the same date. Goodwill was valued at rupees 25,000. C was paid 10,000 immediately and the balance was paid in 3 equal installments with 10% per annum interest. Building was appreciated by 20%. Furniture was depreciated by 10%. Prepare the balance sheet after the retirement as well as prepare C's loan account till it is closed. So first of all, we have to set the ratios. ABC, old ratio was 2:1 and the gaining ratio will be 1:1 and the new ratio will be 1:1. So first of all, let's start the journal entries. Accumulated profit, general reserve to A, B, C, 10,000, 4,000, 4,000, 2,000, then accumulated loss, A, B, C to profit and loss account, 2,000, 2,000, 1,000, 5,000. Then the journal entries of revaluation, building to revaluation, 8,000, that is 20% of 40,000. Then revaluation to furniture, 10% of 20,000, that is 2,000, and leave the space for one journal entry for the loss or profit on revaluation account. And after that, this is the turn of adjustment entry for goodwill, that will be A, B to C, 2,500, 2,500 and 5,000. Then C's capital account debit to cash 10,000, then C's capital account debit to C's loan at the rate of 10%. We don't know the amount, so I am going to leave the space for the amount. I will come to know when I prepare C's capital account in the ledger posting. Now this is the turn of ledger posting. First of all, we have to prepare revaluation account. So by building 8,000 to furniture 2,000 and the balancing figure on debit side is 6,000, this is the profit, and to A's capital, to B's capital, to C's capital 2,400, 2,400 and 1,200. Totals on both sides 8,000. So we had left the space for one journal entry. Let's complete the journal entry. Revaluation account debit to A, B, C 6,000, 2,400, 2,400, 1,200. Now goodwill account. No need to prepare goodwill account because in our journal entries, goodwill account has been neither debited or credited. So after that, let's move to cash account. That will be to balance BD 15,000 by C's capital 10,000 by balance CD 5,000. Then C's loan account. C's loan at the rate of 10%. So we have to leave the space because this amount will be calculated when we prepare capital accounts. And I strongly suggest C's loan account should be prepared after the capitals. That will be convenient for you. Capital accounts. By balance BD 30,000, 20,000, 5,000. By reserve fund 4,000, 4,000, 2,000. To profit and loss account 2,000, 2,000, 1,000. By A's capital 2,500 in the C's column. By B's capital 2,500 in the C's column. And write down goodwill account in the inner column for the convenience. And then to C's capital, goodwill in the inner column 2,500 rupees, in A's column 2,500 in the B's column. Then to cash 10,000 in the C's column. Then to C's loan account at the rate of 10%, 2,200 in C's column. Then to balance CD 31,900, 21,900 and the totals on both sides 36,400, 26,400 and 13,200. And now prepare C's loan account, that is by capital account 2,200. And let's prepare the balance sheet as at 31st December. I'm going to make columnar balance sheets. So building previously 40, now 48, cash previously 15, now 5, profit and loss account previously 5, now 0, furniture, previously 20, now 18. So total is 71,000 in the new balance sheet. Capitals: A 31,900, B is 21,900, C 0. Then reserve fund 0, creditors 15,000, 10% seized loan 2,200. So in this way the balance sheet is prepared as at 31st December. But there is one more thing that has been asked in this question, that prepare seized capital account till it is cleared. And it is clearly stated in the question that seized loan will be paid in 3 equal annual installments with 10% interest. It means the firm will pay the whole money in 3 equal installments. Let's reopen seized loan account. And seized loan, it was on the credit side on 31st December by capital 2,200, and we have to pay this much money in 3 equal installments. So 1/3 of 2,200 will be 733. So at the end of first year we will pay 733, and at the end of second year we will pay 733, and at the end of third year we will pay 734. I am not going to write down any paisa for the convenience of calculation. So the paise has been rounded off to 1 rupee. So let's move to seized loan account at the rate of 10%. So by capital account 2,200, and the next year on 31st December we have to calculate interest, because we have used money of 2,200 of C, and today at the rate of 10% the interest will be 10% of 2,200, that is 220. So on credit side we will write down by interest. Basically whenever the interest becomes due from our side, our journal entry is interest account debit to seized loan account. So in this way we will write down on credit side by interest 220, and the total will be 2,420. In this way we are going to pay today 1/3 of the principal plus interest. So on 2 cash, and that will be first installment. In the inner column you can write down, and the amount will be 733 plus 220, because today we have to pay interest 220 as well as 733 principal. So to cash will be 953. So to balance CD 1,467. It means last year our loan was 2,200. Now our remaining loan is 1,467. And now on 1st January by balance BD 1,467, and on 31st December by interest at the rate of 10%, that will be 147. Basically we have calculated 10% interest on 1,467, that is 147. So total on credit side 1,614. So let's make the payment today. Whenever we make the payment of loan, our journal entry is loan account debit to cash. So on 31st December, this is the next year, to cash we can write down in the inner column second installments, and today we have to pay 733 plus interest, and the amount of interest today is 147. So 733 plus 147, that is 880, and to balance CD 734. So total on both sides 1,614. Now next year on 1st January by balance BD 734, and on 31st December by interest we have to calculate the interest 10% of 734, that is 73, total 807. Now come on the debit side 31st December to cash, in the bracket you can write down third installment, and in the inner column in the next line you can write down 734 plus 73, because 73 is the interest and 734 is the amount of third installment, that is 807. In this way there is no balance CD, account has been closed. So you can see that every year we have to calculate 10% interest on the balance amount, and then we have to pay the installment, means the principal plus 10% interest. If you couldn't understand this account, please replay this episode and watch it again.